First up, the narrative around the purpose and effectiveness of quantitative easing has changed in recent months, especially in light of the recovery in the US economy. The end of QE could also herald the beginning of an interest rate cycle that will see interest rates in the developed world begin to rise. So what does this mean for bond yields, bond prices, and of course equities? Rob Spaniard from Resco Asset Management is with us in studio. And Rob, where do you want to start? Because we've got a lot to cover in 15 minutes.
The difficult thing is it's nobody really knows. We can try speculate. I think Ben Bernanke, the chairman of the US Federal Reserve, has gone on record that he doesn't want to stay around for a third term. Which would
he would want to stay around
exactly.
And see if his experiment works. At least if he's out of office, he won't get nailed.
Absolutely. And it was termed unconventional monetary policy because it's something that you don't really do. You don't just print money like that. So no one really knows. We can speculate. We've seen this last week or two the impact on emerging markets, not just South Africa, Mexico, Brazil, Australia. Emerging markets coming under pressure. A lot of people are citing that as a reason. That as the US economy is recovering now, money would rather just stay here. And part of the thing where we've been a huge beneficiary is this desperate thing internationally looking for yield. And that's been because they've made interest rates about zero in the US, so you'll go anywhere to try earn 5-6%. Huge impact on us.
Rob, have you got a handle on what the actual amount of quantitative easing is that they've used over the term since they started this? The first program, I think, started in the midst of the financial crisis in 08, if I'm not mistaken.
You're talking about $3 trillion, give or take a couple of dollars.
$3 trillion.
$3 trillion.
$3 trillion.
So, I mean, just to take this forward, in terms of the signaling effect now, obviously we've kind of had one or two sound bites, and there's always a very big, long and I guess drawn out process that the central bank takes when it does things like this. So it begins with signaling verbally to the market what's going to happen. Do you think that they will actually slow the buying down before possibly reversing it, or how do you kind of expect them to deliver this into the market?
Yeah, we think that's what will happen. But we're in this funny zone where there's a nudge and a wink and a nod. But there's, at the same time, on the other hand, you don't want to mess with the Fed. That's a good maximum. If the Fed's going one way, you don't try to go another way. You lose a lot of money doing that. But it's been accepted that it's going to have to unwind. Now, the problem the Fed have is if they hint too strongly, then US interest rates could jump 2%. You're saying 10-year rates could jump 2% almost overnight. They don't want it to go up too quickly. So they're playing this cat and mouse game with the market. But everyone knows eventually that those rates are going to go up, that quantitative easing is going to end.
It is going to end, but not anytime soon. Can we put that into the conversation?
See, it's not even when it ends. It's like it's when they hint it might end. You're playing. You're getting this huge double speak with the Fed, where guys analyze the statement and where the comma is, where the full stop is, where the exclamation mark is, and that's the zone we're in now.
Can I go to your call on the Rand? Did you put out a piece in October 2012? Have I got the date right?
Yes.
Saying Rand was going to 10?
We did, yeah.
We're going to pat you on the back.
Thank you.
Well done. I don't think there were many people. The only other house calling it to this level was Ford.
That's right.
Calling it to around these levels.
Yeah.
So considering you got it right the first time around, what's going to happen next?
Well, we'll go with the trend and say 11.
11? Are you being serious?
we do think the Rand has got scope to weaken more. And it's not a sentiment thing. It's not that we're feeling negative about South Africa. It's that the tide is going out in emerging markets generally. And if you take us, Brazil, Australia, very similar. We've fallen most because the problem is we're the weakest of the emerging markets. So we're down about 10% in the last 3 months. Both of those last two are down 6%. So it's an emerging market trend. And our current account deficit is very worrying. We've got to annualize the 200 billion Rand current account deficit, and we've been funding that with guys buying our bonds and our equities.
Saying that we're going to 11, we are stronger from the 10.36 level that we hit. We're now at 9.95 on dollar Rand. But in your opinion, sorry Warren, and I'll stand down for a couple of questions.
No problem.
This is going to be just a short-term reprieve and then back through that 10.
It's a kind of zigzagging in the weakening Rand direction. And I think we need government to take strong leadership and polish South Africa's credentials as an investment destination.
Okay, Warren, you can ignore me for a while now.
Rob, we in amongst the Rand sell-off, obviously we've been wallowing in our own misery, seeing what's going on with the economy and everything. You mentioned that emerging markets have been selling off as well, and a couple of the currencies, emerging market currencies, have weakened. Although it's just nudge, nudge, wink, wink at the moment with quantitative easing, you honestly believe that the market's already starting to price in the reversal of quantitative easing. And what I wanted to really get to was, once quantitative easing stops, does that really trigger the next big macro event, which is obviously the rising of interest rates in the developed world?
Yeah, absolutely. Interest rates will go up. We know that. How much is the question that worries us all. So we see a zone where there's next 1, 2, 3 years, you probably can make great money in equities. Somewhere out there's icebergs, and if you're going too fast when you hit an iceberg, you have a Titanic kind of event.
So we've got a situation then which is has a major effect on share prices, equity prices in particular. I think even more so than the fact of than quantitative easing, and that's a rising interest rate cycle. I mean, what do you expect then? Certainly as a foreign investor or an international investor investing in places like the States, what do you think that's going to do to equity prices going forward?
Well, there is a thing that is in favor of equities, is that guys have made great money out of bonds, and you're getting the great rotation out of bonds into equities. So that money has to go somewhere. In bonds, you're getting killed at the moment, so it is an attraction to go to equities. That's a good thing. Where it is a negative is in the emerging markets, because if you take us, we're 20% up year on year. But
that situation can reverse.
But the rand's
quickly.
down 20%. So if you're sitting in the US, you've made nothing. Whereas if you just stayed at home, you made about 23%.
Are we going to see flight of capital, as we have seen some starting trends from emerging markets as a category?
Yes.
Continued and sustainable and deep.
Yeah, it'll be an ongoing theme, we think, over the next couple of years.
Rob, we've got the Resco Prudential fund that we wanted to discuss as well, and we've got having a look at the portfolio here. You've got holding some interesting companies overseas. In the top 10, though, you've got Samsung and JP Morgan Chase. But I was really interested in assessing what you thought of Samsung in relation against playing that off against Apple, which is obviously its biggest competitor in the consumer electronics space. You favoured Samsung. What do you see there that you don't see in Apple?
Well, correct. We like Apple. Apple's on about 8 times. I mean, Samsung's on about 8 times earnings. Good company, growing nicely. In fact, we've actually just bought some Apple as well. Apple has just got far too cheap, down at about close to $400 a share. It come down from about $740. Both companies are actually going to do well. We prefer Samsung, but there's a good investment case at the moment for Apple. There wasn't at $740. There was at $400.
We've also got a situation with, and this is one of the themes we talked about off air. You've got a couple of the listed property companies in the portfolio. This is a sector that I think it's been missed by some of the big investment houses, the run that we've seen in listed property. Just take us through what your thinking is around the sector, obviously in light of what you're
Well, we've seen a pullback of about 15% across the board in listed property.
Yeah, so what we did at the beginning of the year, we exited local South African listed property and we went to international listed property. So we swapped out. Proved to be a good call because the South African, initially the first month we did it, we thought, wow, made a mistake, but it's worked very nicely for us because the South African listed properties got really, really smashed.
And is it now, would you switch back, sorry Warren, back into South African listed property with that 15% pullback?
No, not yet. No, I think there's an the bond rates increasing in South Africa is a worrying trend. So you've got a tailwind for the medium term in listed property.
So we've got the stake in Redefine Property.
That's Redefine International.
International, yeah. Okay. Just to explain that for us, because I understood that the companies Redefine International and locally had merged or had joined at some level.
No, it's two separate companies. Redefine International's listed offshore. It's a London listed company with foreign holdings. And there is a cross-holding in it from Redefine. But it's two separate companies.
Let's switch from listed property to resources and just get your view on how you see the resource story unfolding. If you're looking for value in the current environment, some may say, well, it's time to look at resources. That's if you feel China's going to continue full steam ahead and the rest of the world's going to recover. Are you net positive or net negative on the resource story?
We're still negative about it. We have been for a while and we're still negative on resources, really because the margins there are still very high and they can come down a lot.
So you expect
Still-
significant downside still in resources, or are you starting to look at a couple of the
No,
majors?
not yet. We still think it's a negative investment scenario.
Are you just taking making a distinction there between all resource companies, or in particular South African resource companies? Are they getting to a level where they're actually going to offer upside at some level?
You know, South African resource companies are probably got an advantage because if your costs are in rands and you're selling in dollars, it's a lot better than an international company. But it's still not. We do own some Sasol, 3-4% holding. We're a little bit concerned about the oil price going forward the next couple of years, but that's the one resource that we do own.
So just in terms of, we've got Sasol. I'm just trying to reconcile some of the views you've got here, because the rand weakness obviously benefits Sasol.
Yeah.
A recovering US, and I mean, we've got this massive issue around the amount of capex that the company's spending in Louisiana, in particular around the development of shale and some of the projects that they've got there. Are you concerned at all by the extent of the capex that they've got planned for the next few years?
I mean, it's a big number, but I think that's not our biggest concern on Sasol.
Is Sasol for you a significant rand play? We mentioned how weak rand is obviously hugely beneficial to the company. If you do have a view that 11 is in the foreseeable future, is that your strongest reason for buying into Sasol?
Yes, yeah. If we could hold the oil price at $100, which is an if, then Sasol's got, their costs are mostly in rands and they sell in dollars. That's good combination for Sasol.
So where does the risk come into for the oil price?
I think it's going to go to 80 because of the amount of oil that the US, they're finding onshore in the US, shale gas, shale oil, and then even technology, even old fields like the North Sea, they're finding huge new sections of it.
Okay, so let's look at it this way. If we see the oil price go to 80, and even if the rand and dollar rand tracks at 10.50, what would happen to Sasol? Are we going to see a pullback, a dramatic pullback on that 80?
Sasol will go down.
This is difficult. What are you going to do with it? So how are you going to make, where's the red flag for you to, I mean, oil will drop in one foul swoop?
I think OPEC are trying to hold $100. That's what our job's difficult to as fund managers. You've always got this.
We're very glad we sit on this side of the table. I have to be
call,
honest.
And you know, that's why we'd have it as a 3.5% holding. We like it, but we've always trying to find the negative case in all our investments.
Rob, just coming back to your portfolio, you've also got a fairly big holding in Oceana Group. Just take us through what the investment case is there.
The great one there, Warren, is they sell. Well, hard currency is a big factor in their lives. It's an international commodity, and their costs are mostly in rands. Not entirely. These things are never totally black and white, but a weak rand is a tailwind. That's probably a good way of putting it. That's a very well-run company as well.
One more question. You can go first.
Oceana Group, and then obviously Discovery Holdings.
Yeah.
Trading, I guess I would argue it's looking a bit expensive at the moment. It's come off a little bit. I think it's below 80 Rand, and we see it on the screen at 78 Rand at the moment. But Adrian Gore and the team have seeded these businesses overseas, and they haven't really come into the income statement, into the financials yet. What's your sort of take on how well those businesses are going to do going forward?
You know, it's starting to come through now. The UK business is about 10-12% of profit, which is great. The one that really excites us is China. And in China, you're getting a free option there. You know, could their China business, the share of that China business become as another 10 cent equivalent to what Naspers says? We think there's a chance, but we're not overpaying for it. We're not paying 100 times earnings. We're getting that as a bonus, and it's a nice bonus to have. We